The word shortage is a loaded term when talking commodities. Almost inevitably, when uttering the phrase, it summons a chorus of angry commenters who feel bitterly betrayed by past exaggerations. For too many years, people have heard someone selling silver say, "There is a shortage, so buy, and then buy some more." We put out a video in May touching on how a silver shortage could play out, and although we aim for balance, it still set off some understandably tense emotions in a segment of our audience. Retailers have claimed shortages for years, they said, so why trust it now? But there's a lot more to understanding how shortages work in commodities than assuming it's a parabolic price swing or nothing. If our last video on the topic revealed anything, it's that the term is misunderstood and often misused. Stick around for this one, and we'll dispel some of the myths that often lead precious metal investors astray and show you how a shortage in platinum is playing out in real time right now. If you want tempered perspectives on precious metals, this is the one channel you should subscribe to. Clicking subscribe is the best way to keep this channel alive and ad-free. Thank you for your support. The word shortage might conjure memories of empty shelves after lockdowns were announced in 2020. And usually, this is what people think of when they hear the word shortage. You can't get the product at any price because it's simply not available. But that's a catastrophic shortage, and you can have a shortage that does not include the worst-case scenario, and it can still affect prices. There was a nationwide shortage of several essential goods, including some important building materials like lumber. Lumber never exactly went out of stock. Instead, the material prices rose in response to increased demand. Lumber was mostly available, but you had to pay more and potentially wait longer to get it. The price rose over 400% before it finally peaked, and it was that rise in price that led to demand tapering. It wasn't that people didn't need wood. It was that less people could afford those elevated prices, and in some cases it became cheaper to build with other materials. Substitutioning and increased supply also eased the pressure. The true definition of a shortage does not only mean disaster-level depletion. In economic theory, a shortage is a condition where the quantity demanded is greater than the quantity supplied at the market price. It's those last two words that make a big difference: market price. In precious metals, you have to know what products set the market price and where. The number one myth: if there is silver on the shelves at my local coin shop, there is no shortage. Let's take a trip down memory lane in the spring of 2023 when Silicon Valley Bank failed. On March 10th, a modern-day bank run was triggered by the collapse of Silicon Valley Bank, which was the second largest bank failure in U.S. history. At issue was the large concentration of uninsured accounts, mostly held by startups and venture capitalists. Gold and silver demand was sensational during this period. Many coin shops were barren, and many bullion dealers offered substantial premiums for top products. In some cases, precious metal investors were offered $10 over spot for silver eagles. Spot prices of gold and silver rose, but only modestly. Silver rose from about $20.50 per troy ounce to trade between $23 and $25 for the next 12 months. Gold rose from approximately $18.50 to about $2,000 an ounce, and it traded in a relatively stable range for a year as well. Why? Why didn't it take off in the midst of all this demand? Because the market prices of precious metals are not set by retail bullion. The market price is led by trading of futures contracts, what we commonly call paper gold and paper silver. It's those markets where a shortage would be problematic because that's where the price setting mostly occurs. We can witness this today at this exact moment in platinum. While gold and silver have been the heroes of the precious metal world for years, platinum has been the sleeper investment. We covered what's going on with platinum in last week's video, and recent evidence only further solidifies the position that a platinum shortage is underway. And a quick recap. lease rates have spiked on platinum, the market has entered backwardation with physical platinum commanding a premium over paper contracts, and we're seeing prices rise in response. Platinum is up more than 50% year to date. This outpaces the price action we've seen on gold and silver and smashes the S&P 500, which has struggled to rise 5% year to date. And in response, we just found out that the CME Group has raised the margin requirements on platinum futures as of June 27th. Something many silver bugs will remember was a tactic used to stall momentum and cap rallies when silver broached key levels. Platinum declined almost 6% instantly, and it's a good sign that there's stress in the market. To get the full breakdown on what's going on with platinum, you'll want to watch our video from last week. But what's important about platinum is the current rally is being driven by fundamentals, which means it's a good model for other assets. For 3 years, there's been a structural deficit with demand outstripping supply. Combined with an estimated 10% surge in demand this year, we're seeing the shortage play out in the numbers. It's not retail platinum that's delivering the headlines. It's the platinum moving through the exchanges. And if we see a shortage in silver or in gold, it will be the metal that is moving through the exchanges that results in a sudden rally. The metal held in the vaults that's held for ETFs and futures contracts has a specific standard weight and purity. These are not your dad's silver Morgans. The gold must have a minimum fineness of 99.5% gold, platinum must be 99.95% platinum, and silver must be 3/9 fine. Silver bars must be 1,000 ounces, and gold is typically either 100 ounces or a kilogram, although there are weight tolerances for both. There's also only specific brands admitted into the vaults. This is another reason why the availability of retail bullion is not a good indicator for whether there is a shortage of investment-grade metal that could affect prices. So what we're seeing in platinum right now is a great example of what we could see in silver one day. Silver has been in a structural deficit for about 6 years, but it takes more time for a metal like silver, which is plentiful compared to platinum, to experience severe depletion. We don't know when a shortage will impact a metal like silver. All we can do is watch for the signs in the numbers. We do know that eventually, if you continue to operate at a deficit, then there is only one outcome given enough time. And that brings us to another myth about shortages, the one that causes the most problems. The mistaken belief that a shortage will always end in parabolic price increases. We've seen shortages play out over the course of weeks and over the course of years. It does not always translate to a massive spike in value. It's normal to see gains and people get excited, but even if it did translate into a parabolic move, remember that those are typically followed by a sharp reversal. Fluctuating demand, substitution, and economic slowdowns are all factors that could inhibit a shortage from causing a major price movement. And the last myth about shortages in precious metals to address is related to recycling. It goes something like this. Skeptics say even if there's a shortage of investment-grade silver, we could just melt down all the other silver and refine it. Well, recycling and refineries have their own capacity and limits as well, and refining enough product into the proper format can take weeks. Some silver is too difficult or too expensive to recycle in a meaningful quantity. For example, completed solar panels have silver in them, but it's not a solid strand of silver wire they can just pull out. The silver used in photovoltaic is turned into a paste, which is applied to silicon wafers in very thin lines. And there's only about 20 grams of silver in the average solar panel. To get it out, we would need to destroy a panel worth far more than the silver inside of it. Shortages in precious metals don't follow a Hollywood script. They don't need to. The reality is more complex, it's more drawn out. Frankly, more important to understand if you're an investor trying to make informed decisions rather than chasing hype. What we're seeing in platinum is a real-time stress test of how supply deficits and physical market signals eventually challenge the pricing power of paper contracts. If you're waiting for empty coin shop shelves or $100 silver before you believe in a shortage, you've already missed the signs. Structural deficits build pressure slowly, and if silver follows platinum's lead, you'll want to understand the warning signs before the price tells the story. And that's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.